Good morning, everyone. So in today's session, we will learn how we can determine the value of house property in order to calculate the taxes. Okay. So there are different situations. So by situation, we'll understand how we can compute the income from house property. So it's very easy. It's just that you have to, in your mind, should be clear under which situation which tax computation will be applicable. Okay. So first one is that house property is fully let out for the entire year. It means that you have given your house property on a rent for the entire year. So the process for calculating the income from house property under this scenario is similar to what we have understood so far. So this is the same process. And what is the process? That is, it should be the higher of municipal value and fair rent. Then whatever the amount you calculate, it will be the lower with standard rent. And then that value is your expected rent. Then you will compare this with your actual rent. And whatever the value is higher, that is your gross annual value. Then you will subtract all the municipal taxes paid by the owner on or before 31st March of the financial year. It is equals to your net annual value. Okay. So this is the computation method which is used in case your house property is given on rent for the entire year. Then next situation is let out for part of the year and is vacant for the remaining part of the year. So when in the situation it is mentioned that you have given the property on rent for 9 months and for the remaining 3 months for say it was on vacant, you were not able to find any tenant during that particular time, then in that case you have to follow this rule, that municipal value fair rent higher, then higher with standard rent lower, similar that is expected rent. So this is same as we have done in the earlier scenario. But from the expected rent you will subtract loss of rent due to vacancy to come to your reasonable rent. Initially we were comparing expected rent with the actual rent, but in this case when you know that your property was not let out for the entire year, in fact it was remained vacant for some part of the year, it means you have to subtract the loss of rent due to vacancy in order to calculate your reasonable rent. Okay, then you compare this with your actual rent, and in this case actual rent is the rent for the number of months only for which your property is given on rent. So for example, if it is given on rent for 9 months, this actual rent will be for 9 months only, because in reality the house property is given on rent for only 9 months. Okay, so when you calculate this, then you will take the higher amount of reasonable rent and actual rent. That higher amount will be your gross annual value. Then you will subtract municipal taxes paid equals to your net annual value. So this is the only difference in case the property is vacant for some part of the year, that you have to subtract loss of rent due to vacancy from your expected rent. So reasonable rent can be calculated. Okay, so let's understand this with the help of an example. Mr. X is the owner of a house which has municipal value of rupees 3,50,000. Fair rent is 3,20,000 and standard rent is 3,10,000. Okay, the house is let out at the rate of rupees 30,000 per month for the period of 9 months, and for the rest of the months it was remained vacant. Municipal taxes were rupees 30,000, out of which 25,000 were paid on 1st January 2020. Calculate its net value, annual value for the assessment year 2021. It means it is for the previous year 1920. Okay. So first we'll compute the expected rent. So expected rent is higher of municipal value and fair rent, so 3,50,000, then lower of this higher value, that is 3,50,000, and standard rent 3,10,000. So lower is 3,10,000. So expected rent is 3,10,000. Now you have to subtract loss due to vacancy for 3 months. Now loss, since the property was given on rent at the rate of 30,000 per month, it means there is a loss of 30,000 per month for the period of 3 months, क्योंकि 9 months के लिए तो it is already given on rent. So the vacancy loss is only for the 3 months. So 30,000 into 3. 90,000 is your loss. You will subtract this, then you will get the reasonable rent. Now the next is actual rent. So actual rent is 9 months into 30,000, right? Because it was given on rent for only 9 months at the rate of 30,000 per month. So 99 into 30,000 is 2,70,000. Now you will take higher of that amount. So higher is 2,70,000. So gross annual value is 2,70,000. Then you will subtract municipal taxes paid. In this case, the actual municipal taxes were 30,000, but only 25,000 were paid in the previous year. So we will subtract only 25,000 rupees. So the balance, that is 2,45,000, is your net annual value. So whenever there is a situation in which the property is vacant for some part of the year, you have to follow this computation rule. Okay. This is the third case, that house property is vacant for the entire year. It means that the owner has a good intention of giving his property on rent, but due to any circumstances, he was not able to find the eligible tenant and he was not able to give his property on rent to anyone, and his property was vacant for the entire year. So in this case, there is a no loss of vacancy concept, because you have not given your property on rent to anyone, so you cannot calculate the loss of vacancy. Okay, in this case, because it was vacant for the entire year, so you cannot calculate the loss. Instead, what you will do, you will calculate your gross annual value as nil, that there is no value addition to your house property. Whatever your municipal value is there, whatever the fair rent are there, standard rent are there, nothing matters. Your gross annual value in this case is nil. Okay, but municipal taxes paid are allowed to be reduced. It means, for example, in case you have given your property on rent, in case you have paid the municipal taxes of rupees 25,000, so in this case 25,000 are allowed to be reduced. It means your net annual value will be negative 25,000. Getting my point? Gross annual value is near, it is zero, but in case of vacant for the entire year, municipal taxes are allowed to be reduced. Okay, in this case, government says, okay, since you have occurred a loss, you have not given your property on rent for the entire year, we are allowing you to deduct whatever taxes, that is municipal taxes, you are paid to us. We are allowed that you can just deduct that amount from your gross annual value, so that your net annual value will be a negative figure, so your gross total income will be reduced. Okay, अगर ये allow नहीं होता तो net annual value would have been zero. It means आपके gross total income में house property income zero जाती, but in this case आपकी house property income negative जाएगी, because it is a loss. Okay, municipal taxes paid are allowed to be reduced. जाके वहां लॉस में ऐड होगी, देन योर ग्रॉस टोटल इनकम विल आल्सो बी रिड्यूस्ड. ओके, सो ये ऐसे ही होता है कि जब भी वेकेंट पूरे साल के लिए, इट मींस म्युनिसिपल टैक्सेस आर अलाउड टू बी रिड्यूस्ड बिकॉज द ओनर इज actually incurring a loss because he is not able to find an eligible tenant. Okay, now this is the D scenario. In this case, the house property is used by the owner. It means it is self-occupied, means the owner is using his own property for his own residential purposes. Okay, so in this case, the gross annual value is nil. It is always a zero. Okay, you are not the income from the house property is not giving you any value. Okay, it is zero because you are not giving your own property on rent to anyone, so it is zero. But in this case, municipal taxes paid are not allowed to be reduced. So in this case, your net annual value will always be zero. Municipal taxes government कहती है कि तुम खुद यूज कर रहे हो अपनी property. So since the municipal authorities are administering your society, they are providing you sewage facilities, water facilities. So in this case, whatever taxes you are paying to us are good enough. We are not providing you any kind of a relief from the taxes you are paying to us. you should be paying these municipal taxes to us. So in this case, all the taxes paid are not allowed to be reduced. Vacancy के case में it was allowed because वो देना चाहता था but वो नहीं दे पाया. So whatever taxes he is paying, government is saying okay, you can get a deduction for that amount. But in case the owner is using his own property, then in this case government says okay, then provider whatever taxes you are paying, we will not giving you any kind of a deduction. Okay, so self occupied के case में always the municipal taxes are not allowed to be reduced. Okay, owner use कर रहा है तो म्युनिसिपल अथॉरिटी सर्विसेज दे रही है तो सर्विसेज के लिए वो पे कर रहा है. ओके, सो इस केस में नहीं मिलेगा उसे कोई भी डिडक्शन. This is point E, that is house property is unutilized by the owner for full year. Unutilized word is different from vacancy word. Unutilized का मतलब होता है कि the owner still has the possession of the property, but he is not able to utilize it. He is not able to reside in that property. He is not able to use that property for his residential purposes. Okay, he is not able to utilize it. Okay, he has never any kind of an intention to give this on rent. He wanted to use that property for his own self, but he is not able to do so. So if this is the case, it means it is unutilized, and the tax treatment is same as your self-occupied property, that gross annual value is nil always. Municipal taxes are not allowed to be reduced, so net annual value is also zero always. Okay, since the treatment is same as self-occupied, because owner still has the possession of that house property, he is not able to utilize it. Okay, unutilized means that the property is in possession of the owner but he is unable to use. If the following conditions are satisfied, then the property can be treated as self-occupied and the annual value of the property will be nil even though the property is not occupied by the owner throughout the year for his residence. क्या-क्या conditions है? First, the taxpayer owns a property. Okay, he is the owner of the property. Such property cannot actually be occupied by him owing to his employment, business, or profession carried on at any other place, and he has to reside at that other place in a building not owned by him. Means due to that, due to his employment or business or profession, he has to live in a city where he is actually giving a rent. Okay, but he have a property in his native place or whatever place, but he is not able to utilize this because due to his employment or profession or business, he has to stay in a different city and he is actually paying rent for that. The property mentioned in A and above is not actually let out at any time during the year. It means जो उसकी फर्स्ट प्रॉपर्टी थी उसकी नेटिव प्लेस पे वो उसने रेंट पे नहीं दी हुई थी, इट वाज एक्चुअली अनयूटिलाइज्ड प्रॉपर्टी. और दूसरी प्रॉपर्टी जिसमें वो रह रहा था वो खुद रेंट पे कर रहा था, उसने वो प्रॉपर्टी किसी और को सबलेट नहीं करी थी, किसी और को रेंट पे नहीं दी थी, वो एक्चुअली में खुद ही रेंट पे रह रहा था बिकॉज इट वाज नॉट ओन्ड बाय हिम. ठीक है, या भले ही रेंट भी ना दे रहा हो, उसके पापा की हो, वो पापा उसके ओनर हो, ओनर नहीं होना चाहिए आपका जो पर्सन है ना जो टैक्स पेयर, that should not be the owner of the property in which he is residing due to his employment, business or profession. तो दोनों के केस में कोई न्यू रेंट नहीं आ रहा है प्रॉपर्टीज में से. ओके, एंड नो अदर बेनिफिट इज derived from such property. कोई भी काइंड ऑफ बेनिफिट आपको इन दोनों प्रॉपर्टीज में से इस प्रॉपर्टी में से जो प्रॉपर्टी आपकी अनयूटिलाइज्ड है उससे और कोई बेनिफिट नहीं आ रहा है, किसी भी टाइप का बेनिफिट. सो इन दिस केस the property will be called as unutilized property and the tax treatment is exactly similar to your self-occupied, and this is a case where any property can be called as self-occupied. So it means taxpayer should own a property, he should live at a place in a house due to his employment, profession or business, and that house should not belong to him, that he must not be the owner of that house, both the properties are not actually let out at any time during the year, and no other benefits are derived from such property. So in any situation, if these four conditions are satisfied, it means the property is called as self-occupied property. Okay. So for example, Mr. X is the owner of a house in Delhi. Okay. He owns a house in Delhi and he's working with an Indian company in Delhi. Due to some project, he had to shift to Mumbai for 2 years. Okay. He took some of the furniture and other appliances along with himself to Mumbai, and the remaining were kept in his house in Delhi. Empty paid are rupees 25,000. So in this case, Mr. X is a owner of a property in Delhi, and now he has shifted to Mumbai for 2 years, and he has taken some furniture and appliances to Mumbai from Delhi. Delhi house is not given on rent to anyone, and Mumbai may, in case he is staying with his relatives or he is staying on rent, doesn't matter. Okay. So in this case, the house in Delhi will be considered as a unutilized self-occupied property, but that is, he is not able to utilize it, but he is the owner of the house in Delhi. So in this case, self-occupied treatment will be applicable, which says that your gross annual value is zero, municipal taxes are not allowed to be zero, and net annual value is zero. Okay, so same treatment will be applicable in this scenario. Next is, more than one house property is self-occupied by the owner up till financial year 1920. Okay, up till financial year 1920 means assessment year 2021. So up till that point, the rule of the law says that in case the person has house property, more than one house property as self-occupied, then he can be given as an option to choose any one property as self-occupied, and the remaining all the houses owned by him as to be let out. So he has an option. Okay. So he can choose any one property as self-occupied, and the other properties will be deemed to be as let out properties. Okay. Let out means we'll say that there is a rent. Okay. Even if it is not given on rent. So what would be the treatment in case of self-occupied? The net annual value will be zero, and municipal taxes were not allowed to be reduced. In case of deemed let out properties, there will be a expected rent. Expected rent is what? The higher of municipal value and fair rent, then lower of standard rent. So you can calculate the expected rent. You cannot calculate the actual rent because you have not actually rent out your property. It is deemed to be let out. So in this case, the expected rent is equals to your gross annual value. Then municipal taxes are allowed to be reduced, and this is your net annual value. Okay, we'll just understand this with the help of an example. For example, Mr. X is an owner of 4 houses, and all 4 are self-occupied by him. Self-occupied in the sense, in one house maybe his eldest son is living, in the other house maybe his younger son is living, in the third house his parents might be living, and in the fourth house might be he himself is living. Okay, so these are the cases. For example, he has 4 houses and all 4 of them are self-occupied and none of them is given on rent. In this case, he will choose one house as self-occupied and all the other houses are considered as deemed to be let out. So these are the houses: house 1, house 2, house 3 and house 4, and these are the values, okay, which is given. Now he has the option. So in assumption 1, suppose he is choosing house 1 as self-occupied, so it is self-occupied, so NAV will be nil. The others are deemed to be let out. So we'll calculate estimated rent for each house property. So it is higher is 4 lakh, lower is 3 lakh, so 3 lakh again. Higher is 5 lakh, then 5 lakh, lower is 4 lakh 90,000, so 4 lakh 90,000. Higher in this case is 5 lakh, then 5 lakh compare with 5 lakh 10,000, so lower is 5 lakh. SA, you have calculated estimated rent, then gross annual value is your expected rent. You will subtract the municipal taxes paid. This is your net annual value. You'll add them all up. So 10,70,000 is your total NAV when you have chosen house 1 as self-occupied. Similarly, you can now choose house property 2 as self-occupied. So house 1, 3 and 4 will be considered as deemed to be let out. Same tax computation will take place. So in this case, the total is 10,75,000. In next assumption, you have taken house 3 as self-occupied. All other 3 are deemed to be let out. So similarly, you'll calculate all the values. So total NAV is 8,95,000. In assumption 4 now, house 4 is considered as self-occupied. All the 3 houses are considered as deemed to be let out. So you have calculated the NAV, it is 8,90,000. So in this case, the rational assumption where house property 4 is self-occupied and others are deemed to be let out, because this 8,90,000 is the minimum. Okay, so as a rational person, he will choose that option which is giving the least net annual value, because least value means he has to pay taxes less. So in this case, he will choose this method. But very important point to note here is that with effect from 1st April 2020, more than 2 house property can be considered as self-occupied by the owner. So earlier it was only 1 property, but now in this case is 2 properties. So in the earlier example, the person has 4 houses, so he can be given as an option to choose 2 houses as self-occupied and other 2 houses as deemed to be let out. So everything is same. It's just that prior to 1st April 2020, the option is only for 1 house. Now it is given up to 2 house properties. Okay. So in your paper might be you will get the question with effect from assessment year 2021. So your financial year will be this, so it will be applicable. Okay, so in this case you always have to write that with effect from 1st April 2020, more than 2 house properties can be claimed as self-occupied by the owner. So other properties could be deemed to let out. So you'll follow, in this case there will be 3 assumptions in case of 4 houses, right? So 3 assumptions may you'll choose house 1 and 2 as self-occupied and 3 and 4 as deemed to be let out. Similarly, next assumption you could choose house 1 and house 3 as self-occupied and 2 and 4 will be deemed to be let out, and so on. So you'll calculate the total net annual value for all the assumptions, and then again you will you will choose that assumption which is giving you the least net annual value. So it is very simple. Okay, practice, and in case of any doubts please let me know. Then this is G situation in which your house property is let out for part of the year and is self-occupied for the remaining part of the year. ठीक है, it is not a case of vacancy. Okay, कुछ part के लिए it is let out and कुछ part के लिए it was self-occupied. So in this case, we'll assume that the house property is given on rent for the entire year, but the actual rent will be only for those particular part of the year in which the property is actually let out. Okay, and again the municipal taxes were allowed to be reduced. For example, Mr. X is an owner of a house which has this municipal value, this fair rent and this standard rent. It is written specifically that property was self-occupied by the owner for initial 3 months of the year, and after that it was given on rent at the rate of rupees 20,000 per month. Municipal taxes paid are rupees 225,000. Calculate its NAV. So this is similar. So the expected rent should be 2,10,000. So it is 2,10,000 actual rent. It was given on rent for only 9 months. So 1,80,000. Gross annual value is 2,10,000 minus 25,000 municipal taxes paid. So 1,65,000. Sorry, it is 1 lakh. Oh, I think there is a calculation. So 2,10,000 minus 25,000. 1,85,000. Okay. So answer should be 1,85,000. 8 होगा मुझे. Okay. This should be 8. Clear? Next, part of the house property is let out for the year and part of it is self-occupied for the year. Now it is talking about house property, is not talking about the year. Year is not divided. Actually, the property is divided. That part of the property is let out and remaining part is self-occupied. Okay. So in this case, we'll treat the parts as a separate house property and we'll just allocate your municipal value, fair rent, standard rent and municipal taxes in the ratio of the area in which the property is let out and self-occupied. So for instance, this is your house property, out of which 30% you have let out and remaining 70% is self-occupied. Suppose in this case, the first floor is let out and the ground floor is self-occupied. So in both the cases, whatever the part is there, in this case 30% will be treated as a separate property and 70% will be treated as a separate property. In this case, first floor is separate and ground floor is separate. Okay. So for example, Mr. X is an owner of a house of which 60% is let out and 40% is self-occupied. The municipal values are this. The monthly rent is this. Municipal taxes paid for the full house is 10,000. Okay, calculate its NAV. So we'll consider this 60% as let out as a separate property and 40% as a separate property. Okay. Municipal is 6,000 per month. So 6,000 into 12 is 72,000. So 40% is 28,800. 60% of this is 43,200. Similarly, for 5,000 into 12, 60,000. So 60,000 into 40% is 24,000 into 60%, 36,000. So every value you have to allocate between them in the ratio which is given in the question, that is 40% and 60%. In case of self-occupied, your NAV will always be nil. Okay. In case of let out, your higher of this is 43,200 and the lower of higher amount with standard rent is 36,000. So 36,000. Actual rent is 2,000 into 12 because this let out property is only given on rent. Self-occupied was using by the owner for himself. So in this case, the actual rent is entire under the let out property, GAV. Municipal taxes. In this case, the 10,000 is for the entire year. So I forgot to just bifurcate it. So 10,000 into 60% is 6,000. So in this case, instead of 10,000, it should be 6,000. So 36,000 minus 6,000 should be 30,000. Okay, so it should be 30,000. The answer should be 30,000, not 26,000. Okay, there is a typo here. So municipal taxes also you have to divide. So in this case, 10,000 is for the entire house. So we'll just allocate it to the self-occupied and let out property. So in this case, it is 4,000. But in case of self-occupied, it is not allowed to be reduced. So it is nil. And 10,000 into 60% is 6,000. So it is allowed to reduce. So 36,000 minus 6,000 is 30,000. So I hope all the situations are clear to you. In case of any doubts, please let me know. I'll make a separate video in case you have a doubt. And please keep liking my videos and subscribe to my channel. Thank you so much.